All right, guys, it is 12:30 and we're going to get started. First of all, welcome to the President's Day special. We're doing on inside and outside bars. Thank you guys for coming along. I just want to give you guys a little bit of who I am real fast. You know, Chuck, you guys probably see my alerts in the Discords and different Discords. I like to do, free things like these mini classes and stuff like that on holidays because, it's not all about getting money for services and stuff like that. Sometimes we truly want to just push good information out, and holidays are a great time to sit back, relax, and give people some good information so hopefully they could be successful. And especially in market conditions like we are today, they're volatile and we got certain things going on. So this is, on President's Day, I want to give you guys back a little something for all the loyalty. Second of all, you guys know that I'm a military guy, hence the Traders War Room, careerist military guy, kind of, started this trading thing about 10 years ago. And, we went into this business with a few of my military veterans, and, we looked at what we know, and we knew operations, military operations. And then we looked at it and we were like, we like finance and we like, the stock market. How can we incorporate it? And we found a niche, out of a gimmick. Let's go to war, Traders War Room, and we kind of run it like an operations cell, planning, training, managing, securing. Everything that goes with operations, relates directly to the stock market, in my opinion. So we kind of keep that, and, we've been fairly successful, and, got a lot of great people that follow the alerts and everything like that. And, we're doing very well. And, I thank, Chris Sane for putting me on his Discord. I went for a job interview with his boy Isaiah, and he hooked me up, and, it just blossomed from there. I got my own endeavors as well because we're entrepreneurs. We're trying to do our things, but, that was really the platform because he had the name and recognition, and, he was able to be a catalyst, like in the stock market. He was able to be a catalyst for Traders War Room. We're doing really well because of it. So, thank you. And to the other Discords that I'm in, everyone's great. We've got a good market coalition, as I like to say, and I like to call it. So, I thank everybody for coming along with it. Now, with that said, you guys know a little bit about me. Let's get into the particulars. So legal disclaimer, of course, this is not financial advice. This is for entertainment and education only. You got to be responsible for every decision you make. We want you to have fun. We also want you to use caution, but always we want to go to war. Next one. Oh, I want you guys to check out the website if you get a chance. We got a lot of good things over there, and we highlight a lot of stuff, okay? And then finally, our next class, I wanted to highlight this because this is really an important class. We have a CPA coming, and with tax season coming, you can't get a better deal for having a true CPA answering questions and giving you guys the understanding of what's going on. And he's going to do a special segment in there specifically for the military members and their TSP related. So I want you guys to think about that going into next week, because if you guys try to get a regular CPA, you're going to look at $100, $200 for a retainer to talk to somebody to talk about your taxes. But this guy is going to do this for $15 a pop for the class. And then you guys get the recording to utilize as a tool moving forward. So it's a good avenue of approach. With that said, if you guys got specific questions, please put them in the chat group. And I see you guys are already using the chat group. If you got a question so I can come back and answer it, put in the chat group, but also put your email so that I can come back and address the questions and stuff that you have, because some of the questions may not specifically be related to what we're going to go over, but I want to make sure I hit you guys up for your questions so that we can get you that knowledge that you want, okay? So please do that for me right there. Without further ado, let's go ahead and get into first part of the class. All right, so what we're using here is a Webull. Now, I want to use this, and first of all, when we're talking about inside and outside bars, the first part is we got to use a screener, okay? And a lot of people don't utilize the screeners like they should, but the screeners are a great tool to survey the land for us. And, we're here to provide you guys fish so that you guys can eat well, but it's not just giving you guys the fish. We want you guys to learn how to fish as well, so you can, make your own fish dinner and you guys can eat well long after our services are done and we're out of the game and so on and so forth. So what I really want you guys to understand is how to kind of start going and looking for these things. And we're doing this live. Obviously, the market's not open. So all this is, old data and everything, but we're going to go ahead and look at a screener real fast. All right, sorry about that. My dog was barking. But so we're at a screener, and Webull has a great screener tool right here, right? And what we're looking for is we want volume, all right? So when I'm looking at a screener, I want volume. We like volume. Anything over 1 million is decent. So we'll go ahead and go with this volume right here, and we're going to go ahead and push this out a little bit. And specifically, when we're looking for inside and outside bars, we want to use some technical, indicators as well. And one of the great ones to utilize is this bullish engulfing, okay? And bullish engulfing right here, we're going to click on that, and it's going to give us some tools right here. And this is where we're starting out when we're looking for these inside and outside bars. And so let's go ahead and just look at AA first. All right, and so when we're looking at this chart, let's go ahead and make it bigger, maximize. All right, so when we're looking at this chart, I want you guys to understand when we're looking for inside and outside bars, we're not focusing on the 1 minute, the 2 minute, the 3 minute chart, okay? That has a lot of noise. And when you hear the term noise, this is noise, okay? Every minute, this is the high and low of price action, and it's a lot of noise to go for. Yes, scalping is great to use the 1 minute chart, but we want to always get a bird's eye view first. And when we get a bird's eye view, we want to at least look at the day chart. So we're going to go into the daily, and I want you guys to see what we got right here, okay? And also, mind you, not everything's going to be picture perfect, okay? Like when you get a picture perfect setup, that's usually one of those rare instances where it's like, okay, this is textbook right here. We got to execute. But what we see right here is on the daily, we can notice the uptrend, right? We see the consolidation here. We see the uptrend, but we're looking for inside and outside bars. And what we have here is we have a double. So we have an outside bar, which is, the mother bar, right? An inside bar inside of this main point of consolidation. This is the main price action. This is what we're looking for. And the main price action is inside this one. And also it's inside this one as well. So this right here is when we're looking for inside bars. This is a great opportunity because we're up, we consolidate a little bit, and we like this level, and we're continuing on. So when you're looking for places to potentially make a trade, you have to use some of your trend lines and stuff like that. So on this particular chart, if we're going off of the inside bar, right? So we got the inside bar, the main price action on a daily is inside of the main price action either the day after or the day before, which is a great setup. We're going to put some indicators here. And this is just simply drawing lines so that we can get an idea. And when we're drawing lines, we don't want to go straight on where the meat and potatoes of the price action happen. We want to go just a little bit up, okay? Give us a little bit of wiggle room. And this is going to be our high point to consider, right there, 78.20, right? And then we want to make a low point. And again, not on the actual line of price action. We're going to go a little bit below. And so now we got some trigger points specifically for the action. We got a 76.21 and a 77.59. And what we're looking for these points is that if on Tuesday when the bell opens, we start to close, and we can go into a smaller chart now, see where our lines would be at, right? So here's the thing on a smaller chart. So when we trend in, if we start to close coming down and we close below this line, the idea would be that we're starting to think of puts, okay? It's closing here, we're thinking of puts, right? And especially if it comes down all the way here when it opens, we're definitely thinking this is downtrend. But if it closes below here, we're starting to think that possibly it'll reverse and we have to watch it. But here's our main trigger point, right? For consideration, okay? If we stay above this and we come down and test it, right? And we don't close fully behind it, and we test it, and then we start to trend up, we're probably thinking calls might be a good option. And we want to go at the money, in the money if possible, and not just calls too. We can go shares as well, because if we come down and we're looking for it and we don't close underneath it, then it's going to be a good sign that this is a bullish uptrend continuing like it has been. Remember, these are 5-minute charts. A bullish uptrend, because it's consolidating here like it's done, it's going to have to test something potentially. Otherwise, it's going to continue up. And then what we're thinking at that point is too much too soon. So it comes down here, it closes above this line, test, gets us a good opportunity to get in, and we can ride this thing up. If it closes below, we're thinking puts, at least for a 2-leg strategy, because we notice that this thing likes to do 2 legs, consolidates here, up 1 leg, consolidates, up another leg. That would be points where we're looking to get out, okay? So that's just one of them. Let's go ahead and go back to our screener, check out another one. Allstate. Oh, and I had a one-on-one the other day where I did a box pattern on Allstate. So the box pattern is still there. I'll see if I delete it real quick. There we go. So we're going over Allstate, and we put some lines there. I'm going to get rid of that. But what we like about Allstate is, A, insurance. Insurance is always good during times of uncertainty. So we like that about it. But we also like what we're seeing on as far as going into a chart. Now, we don't have a inside bar specifically, not a big one. But what I want you to see is this right here. Notice this price action. Okay, this is on a daily. All the price in that day, the main price, all the volume that was coming in, majority of the the big money that was coming in, hit right between here, right? Now, yes, you had maybe I don't know, example, Kathy Woods make a big buy and you got this long wick, or you had someone make a big sell and it made this long wick. But the majority of the price action right here happened, and it's inside of the very next day. So again, when we're looking at this, simple thing, we're drawing our triggers, right? We're coming just a little bit up, and this is where charting comes into handy. What I chart may be different than you chart, and what you chart's different than someone else charts. So this is where the human factor does come in. What I think looks good, you may not necessarily think looks good. You may think coming all the way down to the wick looks good. To each their own. But I find that coming just a little bit off for being, conservative and a little bit of risky is a good measure for consistency moving forward. We're coming down a little bit right here. There's our points, right? 122.37, 122.96. So not too bad. And we're all the way up here, right? So what we're looking for is, if we don't come down and test this area, which we could, because this is a big volume candle, right? Sometimes it's a little too much too soon. If we don't come down and test this, right, then we're probably going to continue on an uptrend, because we're going to look to test these areas. But when we're utilizing the bar technique, we have these points that are triggers. So we don't make a move on this if utilizing the bar technique unless it meets the criteria. And what we're looking for is this thing comes down below 296 and closes fully. And we can look at the 5-minute chart, right? And we see that it's way above it on the 5-minute chart. So the likelihood of this one actually working after this big run up may not be there, but it could be with a sell-off, because like I said, it's been a little bit too much too soon. But if it comes down here and it closes below this area, that's where we need to mentally be thinking, hey, we need to start thinking about puts, because we're in a sellout position. Same thing as well, since we had this huge run up, we might be thinking it's too much too soon and it's making all this run up, and when are people going to start profit taking? Well, that's where our trigger comes in right here, where it closes below this. We start thinking, okay, it's on a downward trend, make a little bit of money. And if it comes down here and it starts closing below this area, and then we start to see some reversal, this is our trigger point. When it comes back up, closing above this is our line to push up forward. So this one's not really a good example, but it's definitely doing some stuff as far as the insurance is considered. Let's go back to another one. Check out GLS. So GLS, heavy consideration. So when we're looking at this one on the 5-minute chart, we like what we're seeing, right? consolidation, everything. But let's look at the day chart, because I always tell you guys the bird's eye view. And we see that this thing dumped hard, and the volume, and before that, the volume wasn't even anything spectacular, but this thing dumped hard, and we're starting to see signs of that reversal here. So we're starting to see signs of this reversal, and we got on the daily, we got that inside bar that we like right here, right? Or this one's an outside bar. It's inside that meat and potatoes part of the main action. So we like this, okay? And we're gonna make our lines. And of course, we go up a little bit, go down. I tell you guys, it's consistency that makes or breaks the people's bank, right? And here's our triggers, okay? If we close fully above this top line, we're probably looking like we're going to get this reversal, which it might be happening. We want one more, day of closing green. But if we close above this, we're looking at that reversal. That's a trigger for us to think about going long on the position. If we fail and we close below the line, that's probably we failed, and we're going to head down for a little bit. That's the put consideration right there on this particular trade. So at this point, you love Kathy Woods. What's that? State Farm is better than Allstate. I see you guys having fun in the chat group. Does that make sense to everyone? Kind of going through some of those. Let's go through a couple more. And I really want you guys to use these screeners when you're doing this stuff. The screeners, and you could do screeners for anything. It doesn't just have to be the inside bar stuff. This mini class that we're doing is just covering one avenue of approach. Utilizing the inside bar, when done correctly, has about an 80 to 85% win rate in a trending market. Now, I want to give you guys a little understanding. We are not in a trending market right now. We are in a slaughterhouse, because the market doesn't know what it wants to do, because it's waiting on inflation numbers, which come out next week, and it's waiting on Russia and Ukraine, which potentially could pop off any day. So this is not what you would consider a trending market, because it can fluctuate from day to day depending on what the news is pushing out. Yes, this is Webull. Yeah, we're using Webull. Yep. And so, but like I wanted to just show you, we're using the bullish engulfing to try to find inside and outside bars, but you can do anything. You can look at, stocks that have the 3 white soldiers, which are uptrends, and that's another place for class, because that's a whole class itself. MACD crosses, so on and so forth. But I just wanted you guys to understand, using screeners is extremely important, especially if you guys are wanting to be serious about your trading and your investing. Let's go to another one. Path. This one's been popular lately. The Path. Okay, we like Path. Look at Path right here. All right. So this is the daily again, and we had some selling pressure coming, but then we had some of that bullish buying pressure here. But we got a nice thick, and our volume's good, over 3 million. Volume was 9 million here, so we like this. We're probably going to go up here and test this, looking at a trend line, right? But we're not looking at that. We're looking at inside bars. So we're going to make our points for consideration. There's 1. There's 2, right? Okay, so here we go. So tomorrow, if we open, and we open above this line here, right? This is where we start to consider that we're going to have a bullish uptrend. Probably, and we need to respect the support. We need to respect the resistance. So, this would be something that we would think we would test. But we close fully above this line on, say, the 5-minute chart specifically. Where are we at with our triggers? Okay, yeah. So we close fully above this line come Tuesday morning, like we closed earlier. We're thinking that we're probably in an uptrend, okay? Now, if we start to dip, we're probably thinking, and we close fully down here, we're thinking that we're reversing, okay? So puts are the idea, or shorting, essentially, if you got a margin account. But coming off of this consolidation, and this right here, this could be too much too soon. So that's why we use the trigger points. We got to close fully, and I like to use the 5-minute chart, because I told you guys earlier, using the 1 minute or the 3 minute or whatever, it has a lot of noise. This looks like a lot of noise, but this is price action from top to bottom within 5 minutes, okay? So it's a lot more better, in my opinion, than utilizing a bunch of noise off the 1 minute and 2 minute charts, okay? Those are more for scalping, and I don't identify as a scalper. I'm more of a swing trade and I look for good day trading opportunities that can make me some good bucks. And I like what I'm seeing here. We close below this. I'm thinking puts, at least 2-leg strategy. We know it likes to do this 2-leg strategy, right? We had to push up here, right? And we could have sold here and we come down, consolidate a little bit, jump up a little bit, come down, consolidate, 2 legs right there. Come down 1 leg, come down 2 legs. It does this pattern over and over again. So we know that if we close around here, that likelihood and a probability of a 2-leg down trend at least is highly likely, where we come down, consolidate a little, come down, and we can sell. Then of course, down here is our bottom trigger. We close below this. We're starting to think that, okay, potentially reversing. And if it can close above this line and start reversing, we're starting to think about some calls, okay, going long. Same thing here though. If it closes above this, it comes down, touches it, doesn't like this, and starts closing above this fully, we can start thinking potentially calls, because it's going to probably start tracking up, testing this area here, which is good for us. We can make money going both ways, puts down or calls up if it doesn't meet our criteria. And again, if it doesn't hit the criteria, we don't have to get in. You know, these are just trigger points utilizing, looking for volume, looking for sentiment going through. Let me look at the thing. Chuck, do you like inside bars or Elliott wave theory more? You know, I have to get back to you on the Elliott wave theory. I've looked at it, but I don't have the knowledge right now offhand to really talk on Elliott wave theory intelligently. And I've heard about it, but it's not something that I've paid attention to much. So, and I do like inside bars. I like inside and outside bars when the setup is nice. Like I like this one on the daily. This would be something I'll be looking for. Just to give full disclosure, this is something I'm going to be looking for come Tuesday at the bell, because I like this setup here. I like this. This is something I'm riding down, and I'm going to pay attention to path, and I'm going to look for a potential trade to make some money. Now, most of my trades I push out because I identify with swing traders. I don't push out all the trades I get into all the time. Sometimes I do personal trades just because I like the setup, and I do them because a lot of them are day trades, and you know, not everyone can day trade with their 3-day trade limit. So I just some of them, but this is something I'm looking forward to because I like this one. Let's look at one more, and then I'll take some questions and get you guys out of here on President's Day. Okay, Gore's. Let's look at. I haven't looked at this one. Let's look at this one. This one seems to be kind of a low price. You know, sometimes these low prices are good for just buying shares. You buy 100 shares instead of option contracts, and you just ride shares. So, okay, we see. Okay, so what we see, again, we got our setup here. We like this. This is on the daily chart, putting our lines. And this time I'm going to use this little wick on the outside one, just because I kind of like it, because this is a full body candle, and I like that as well. And then let's go get our bottom line trigger, and we'll just use actually the wick on the other one right there. So there's our triggers, okay? And so when we're looking at this one for a potential trade, again, we're thinking bullish if we can close above this point. And it looks as though we're moving pretty well here recently within prices. So $3.75, you know, 328, we're moving about 50 cents right there, you know. And this would be what I'd consider a penny stock. This would, you know, in options, and it does have option flow as well. In options, you can make a little bit more money off of it, but when you buy these cheaper stocks and you're using shares, you're looking for, you know, 100, maybe 200 shares, and you're looking for 25 cents to 50 cents push, you know, make your day's money on the trade. And, you know, I like this. And we're trading, you know, here, 373, you know, again, about a 25-cent trade. So that's what we'd be looking for. We'd be looking for a 25-cent or a 50-cent push on this. We close above this line, we're thinking long, we're buying calls, or we're buying shares to push up, and we're looking for 25 cents to 50 cents push on up. About right here would be where we're looking for. Okay, now again, we open and we're below this. Looks like that's potentially where our EMA support is. You know, we open below this, we start pushing down, we're probably looking to test this area, and it could very well happen because this could be a little too much too soon for this, and we're pushing down. But these are our trigger points for thinking about what trade to go. in what direction. And I do like this one. I like outs. I'm going to actually research this a little bit, you know, and that's the beauty about these screeners, guys. These just pop up and these give you, you know, fresh data based off of your criteria. And these might be stocks that you haven't paid attention to. Like I paid attention to a lower cut before. We did Allstate in a one-on-one mentoring session before, but you know, some of these I've never paid attention to. Marvel Life Science, outs. I pay attention to Path, but I've never paid attention to this. But this is where we learn and grow as traders, guys, is we use the screeners. It pops up different tickers. We look at it and we learn something and see how different trends work and everything. So at this point, nice. How do you determine what strikes to choose and time expiration? Well, I will give you this. That lends to the individual, because it's everything about your price that you have, your capital on hand. But I always suggest, unless it's a lotto trade, I'm always suggesting, especially in this market, when we get a trending market, it might be different, because some of those we can go out of the money and, you know, we're almost guaranteed to make some money on like earning trades and stuff like this. But in this market currently, if you guys haven't paid attention to it, it's rough. And so I am highly suggesting, if you decide to go in with like options, at the money or in the money, as much as your budget can afford. And I want to say that again, this market currently, when we're looking at option trades, you guys need to go into in the money, at the money, as much as your portfolio can hold, because you want to make sure that you get the most bang for your buck. And if you hadn't noticed, some of these out of the money trades, they're just not moving. I mean, when you got, you know, let's look at one of these. Hold on, let me, someone, muting. When you're looking at some of these tickers, their price action is extremely tight, guys, extremely tight. Look at this, extremely tight. We're looking at, you know, you're not making much off of this in an option. If you're going in option, you know, that's on the daily, that's a movement of, you know, pennies and cents. Again, yeah, you got some wicks here, you can make a decent mean, but the majority of the money is within, you know, within a few cents, you know, so it's rough out here for some options. And if you, of course, if you got in, you saw stuff like this and you got in and rode this up, yeah, you're making a decent amount of money, but you're making more money, in my opinion, if you go in the money or at the money options for your trades. All right, Josh, hey. All right, Pappy, I'll get to you in a second. Josh, answer your question. Market is better for swing trade or day trade since it's so volatile? Answer quite simply is it is a better market for day trading. Now, if you're going long, and when I say long, I'm talking, you know, 3 months, 6 months, possibly a year, and you can find some good leaps. Example, I got into a leap the other day on Nokia. Let's actually look at it real quick. All right. All right, Nokia. I got in a leap trade at Nokia, and I didn't alert this. This was just me getting into it, just me trading, right? But what I liked about it is the price was cheap, and I pushed it out until 2024, because with Nokia, they have a whole bunch of contracts that are coming about as far as moving into 6G, 7G, and they're silently pushing their cell phones. If you haven't noticed, anytime you go to T-Mobile and you upgrade your plan, they've been asking if you want to have a Nokia cell phone. So Nokia is trying to get back into business, okay, with the smartphone technology. And they've been in my opinion, they're a sleeping giant. They have the history, they got the know-how. If anyone remembers, I'm aging myself here, but if anyone remembers back in the 90s and early 2000s, if you had a cell phone, what cell phone did you have? You had one of those brick Nokias, okay? So they've been there and done that. Apple and Google, they took some of the thunder away from them, but these guys have been just sitting, chilling, in my opinion, waiting for their day to strike when the other companies got too big and they started slowing down a little bit as far as becoming new and having innovating type of technologies. So I think Nokia would be a good investment. I can't remember my contract offhand, but I believe I did a $5 leap call and pushed it out to 2024, which already is at 566, and I'm just sitting back chilling and letting this do its thing. So those type of trades in this market are fine and dandy because you're buying things on a discount. You're trying to make money on some weekly or monthlies, then swing trading's hard because the market, all it needs is one negative, all it needs is the POTUS to talk about inflation numbers, and the market's going to dump, and then your trade that was trending good on TA is going to take a downward trend because of the sentiment and the fear of inflation and the fear of Russia and Ukraine, this and that. So hope that answers your question. All right, Poppy, could you tell me about your risk to reward strategy? Poppy, I'm gonna bring you on and unmute you real quick. Can you ask your question directly? I'm not quite understanding that one. Can you raise your hand for me, Poppy, so it brings you up to the top? Your digital hand. Poppy Biden. Okay. Hey, I'm gonna ask you to unmute. Can you go ahead and ask your question?
Yeah, how you doing, man?
Hey, what's
I
up,
was just
man?
curious. Good. Yeah, I was just curious about, you were talking about some entries and I probably missed it. But on those trigger points you were showing the support and resistance there, what would be the risk to reward? Like, what would kind of be your target in regards to where you would exit the play, and where would you set your stop loss per se?
Okay, good question. Good question. I appreciate that question. So yeah, so risk and reward. All right. Depending on the market conditions, it's all based on what's going on. And to answer that a little bit fully, if you guys aren't paying attention, if you guys are watching the market and you're looking at your Discords or whatever services you get your alerts from, but you guys aren't also paying attention to the news, you're doing yourself a disservice, in my opinion, because the alerts we push out as analysts, we do it real time, but any true analyst is also paying attention to the news. And so if we are pushing out an alert and, say I pushed out an alert about Ford, right? And this actually happened a couple weeks ago, okay? I liked Ford on the chart. I liked the setup, and I pushed the information about Ford going long about, maybe a week in the expiration. But all of a sudden, I'm watching CNBC, and what do I hear about? I hear about truckers, union rights, a convoy being disrupted because of unfair work conditions and bottlenecking distribution and so on and so forth, right? And Ford started tanking. So that's the important thing to understand, that, why we always hit on DD and DD, because you got to have your due diligence when you're looking at these things, and especially in a market like it is right now. Now, to answer specifically your question, good risk or reward, if you guys notice, when I push out my alerts, I'm always pushing also those trimming positions. Now, I get it. Not everyone's getting into 10 or 20 contracts on each position. Everyone's portfolio is different. However, when you see those alerts that, hey, trim here, you're up, 10, 15%, you need to start mentally when you see stuff like that, you need to mentally consider, what, I'm green. I should probably, trim some if I got the day trades, number one. Number two, if I have multiple contracts. And then you need to be checking the charts, because, we don't want to let a green trade go red, especially in this market where we see shifts violently dip to the downside like we did last week. That was nuts. Last week, let's look at XOM, because that was one of my trades I really want to get back from last week that I pushed on everybody, right? And XOM. So, on the day chart, we look at XOM and we've been doing fantastic, right? Okay, up, everything like that. But then we started downtrending, pretty good right here, and we're starting to lose our money. Well, when that happened, what happened? Well, inflation concerns came out, right? Then we got some news that potentially Russia was moving back their troops, from the lines, and that it was just exercises and propaganda and all that stuff. And we started downtrending. Well, we could have made some money eventually, but it was too much too soon, and we lost too much money, and stop losses were kicking in and everything like that. So that's just one of those ideas where I want to go on, as far as making sure your risk versus reward is good for you. And I like to use, 15% for taking profits. And sometimes I'll hold a position a little bit more. Like I held Exxon, and I shouldn't have held it, but I held it because, I thought the news was propaganda and stuff like that. And it did pop back up, but it didn't pop back up where I needed to be. And so I ended up losing money on Exxon, and that's on me. because I held my position and didn't get out. But usually I like to use at least consider trimming at 15%, consider, getting out at 15% downwards. But especially if your account cannot absorb the loss and continue trading for long periods of time, you guys may need to be more cognizant of, potentially considering profit taken at 10%, profit taken at, and profit cutting at 10%, because I would hate for you guys' portfolios to just get completely smashed because of stuff like this, where we're up and all of a sudden we don't take profits and now we're down 60%. That's not the key of trading and investing. But in this market, this can happen with just a news article coming out on CNBC, or the president talking and making people fear of inflation and concerns and stuff like that. Hang on, this is a long one. Could you touch on order flow? I have very little understanding between knowing when people are buying or selling. I can read volume and watch the candles move, but does that always mean people are buying if it's going up, or could there be more sellers and still move up? Well, I don't have order flow on this computer, but what I will give you is I'll give you an indicator real fast. So these are ones that I like, okay? And I like this one. This one's a good one. Money flow, okay? So let's use Exxon for example, okay? We got our MACD, right? So, this is our moving averages and stuff like that, right? And we got our cross, okay, we got that. But when we're looking at money flow, especially, and it depends on what trade you're going. If you're bearish on a trade, if you're looking to the downside, you want the money flow to point down, okay? Because that means money's going to the sell side, right? But it's also indicating when you get down to the 20s on this that you're oversold. But if you're looking to the bull side, you want money flow to positive. And we can see that right here, right? Where it's going down, bearish, 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 kind of a little consolidation a little bit. And now we start to get that curl up. So there was a glimpse of hope with a reversal, and then we failed a reversal, and we continued down. And it looks like we're still continuing down. We're starting to widen here, and we're still continuing to the downside. So when you're looking at that, that's telling us that money is not coming into the call side, but this is coming into the put side. Money's coming out of this, and people are making money on the sell side. That's what that's telling us. And this is a great indicator to use as far as bouncing ideas off the chart, right? And utilizing indicators. I always preach you got to have 2 or 3 reasons why to push the buy button, right? We look at the chart, we look at one indicator, it's telling us something, we get confirmation on another indicator. If all systems go, we got the cross here, we got money flow curling back up, all systems are go, we go ahead and push the buy button. But in this one, we wouldn't have done this trade because it failed. We had to cross, money flow came up, but our MACD still was trailing to the downside, right? So that may not have been a good trade to get into, and it followed the downtrend right there. So good question, Alfonso. Well, what was another question? Earlier you had mentioned smaller time frames are better for scalps. What time frame is better for longer trades? If the stock reacts to certain prices on support and resistance, why should the time frame really matter? Well, it's again user's preference, but the stock doesn't always act that way on those support and resistance. We've seen that time and time again. Remember, technical analysis was created because there was a trend shown in price action directly correlating to emotional trading of the person purchasing the price action. And so TA exists because we're not robots and we are emotional traders. And you can see the sentiment, right here, example. And we'll do another chart, but right here, everyone's bullish on Exxon, right? Exxon's the next thing in 2022. We're getting ready to go to war with Russia. Exxon's cool, and then all of a sudden inflation numbers, right? And then Putin's pulling out, and stop loss triggers and cascading effect downward. So, emotional trading going on here based off the news and sentiment. Same thing with some other ones. Let's look at this Apple. I know a lot of people look at Apple. Same thing with Apple, Apple had some supply issues and the inflation numbers came out and people started profit taking when it was up here. it hit this resistance point, but then people started taking profits, and we had some negative PR and stop losses, trailing stop losses triggering, tried to come back, failed, and then people were like, you know what, I'm gonna take my money and run, because they've been in Apple since around here, and they were like, that's a good come up. And so it just starts that cascading effect heading down until it finds that support. Question. You guys are coming out with good questions. But to answer the thing about the chart though, we talked about that earlier in the class. A great mentor of mine told me, anytime you're looking at a chart, you want to get a bird's eye view, And so anytime we're looking at charts, I always look at a bird's eye view, which means I go wide on it first, always. And with the more established companies like Apple, like Microsoft, like some of the other juggernauts, you can go out to the monthlies and you can see the trends, but some of these other ones, and then you come in, you're coming in looking for your position. If we went on a monthly, we see on a monthly Apple's down, right? But is that necessarily a trade that's going to make us money if we went put to a month side? I wouldn't be confident on that one, knowing how Apple's been tracking over the past months. And so we look at the weekly, we come in, and we start looking. Now we're starting to get closer in that bird's eye view. Now, instead of being a bird, we're a tree. We're spying with some spy glasses off a tree. We're looking for consolidation. We're looking for points of support and resistance, and they're going to be different depending on what chart we're looking at. Coming to the day chart, and we're seeing what we're seeing. So it's really user preference and depending on your trading style. Now, I like to swing trade, and so I like to trade off the day chart because I'm a swing trader, and I specifically like to do swing trades when I'm looking in power hour. I like to look off the 4-hour chart as well, and I like to see this, like this right here. Now we hit, we look at some intraday support where we're looking at. We had some support here, right? And we're down here at this level. We had our resistance up here. Okay, we got that. But I like seeing this because on the 4-hour chart, within that 4-hour period, we had some good positive price action. Now, do we continue to go down and we start testing these areas down here? Possibly, but we'll see what happens when the market opens over on Tuesday. Now, I didn't hold any positions except for PLTR because I was already in Ford. I didn't do any new positions on Friday because I knew we had a long week, and I was afraid of what kind of news was going to happen with the, Russia and Ukraine and the inflation number. So I didn't hold any positions other than those because they were already open. But it'll be interesting to see what happens come Tuesday when the bell opens. How has indicators helped with your trading entries and exits? I understand indicators are based off historical moves that have happened. How does the MACD or any other indicators determine the price when you are trading into new ranges? Good question. It's confirmation. And we also have to remember, right, even though we can identify a pattern, so, we use Apple again. Let's look at another ticker. I like to use different tickers, Microsoft. All right, we're on a day chart here. Even though we look at Microsoft and we notice that, okay, historically, we've been on an uptrend, a crazy uptrend, right? But here recently, we've been on a downtrend. And we can see that, we can definitely see that uptrend here. We came to some resistance points and now we're on the downtrend, and we're looking to test these other levels that we historically tested around this time frame, right? We're looking to test those areas and see if we can hold. So when we're looking at the indicators, we're using those as confirmation, because ultimately when you peel the onion away, betting on the stock market is a gamble either way you look, because you just don't know what's going to happen. You just don't know. And a lot of times we get lucky, and our trends work. We notice this trend. We think that, okay, if it's continuing down like it has been, we set a point down here. Okay, this had some pretty good support down here last time it was here before the last uptrend. Likelihood of it testing around this area, 283.39. Likelihood of it testing, since it's been on a downward trend, is highly likely. We give it a number, say 70% likely, and we might consider puts and watch it because we're expecting it to come down on the downward trend. But Microsoft could come out on Tuesday with something and say, hey, we just created this new thing, and everyone's excited for it and all this and that, and then Microsoft just starts shooting up. because people believe in the new innovation and believe in the future. So it's really a crapshoot, but we just do the best we can by looking at the chart first, bouncing our ideas off of the thing. You know, we're looking at the MACD. We see that we're tight instead of being wide. We're starting to get tight. You know, looking at the money flow down here, seeing where we're at on money flow, and we try to make the best estimate on where we think the price is going to go. Hang on. Okay, my apologies. I was wondering, when we hit new ranges, whether it's all-time highs or all-time lows, are we starting to trade in unfamiliar territory? How will indicators be able to help you? Okay, did I answer the idea with the indicators on how they're able to help you? Just basically being confirmation on your idea when you're looking at the chart. The idea behind this is you look at the chart first. What am I using for indicators? I use the MACD, I use money flow, I use RSI, and those are about the three I use primarily to give my ideas on when I'm trading technical analysis. Now, when I'm trading for a position to go long on, such as you know, Nokia or you know, Apple, stuff like that, I'm not really interested in the indicators per se, because I'm not looking to trade it. I'm looking to invest. And so I'm just looking to get in at the best price currently that I can, because I've read, you know, company information. I look at their portfolio pipeline, you know, it makes sense to me. You know, I understand it. I can see it in the future, and I'm deciding to go long. So anything that I'm trading, as far as trading, you know, looking to swing trade, day trade, or a short-term hold, I'm going to use the chart first, see if I can notice a trend. If I notice a trend, I'm seeing what the MACD is telling me. Am I wide? Am I wide? Am I tight? What's the money flow telling me? Do I have money coming out of it, or do I have money coming in? And what's the RSI telling me? Am I trending downwards, or am I looking for curls up? Do I have room to grow, or do I look like I'm still headed down? You know, looking at this one, you know, we're looking at RSI sitting here around right there, right? So this, to me, from Microsoft, is telling me we're approaching that oversold area, and probably because Microsoft is a good company, we come down a little bit, test those, and then we bounce pretty violently up. Sometimes I use EMAs, but mostly I use the chart what I'm looking at, and you know, use the five minute MA. I don't use EMAs very much. I like Super Trend. You know, I like Super Trend for, you know, to give me kind of an idea. So I'll use Super Trend sometimes, and that runs off of, if you guys haven't used Super Trend, it's a cool gig. It runs off of the ATR level. It does a mathematical equation using the ATR, and it gives you some buy zones and sell zones. It's pretty good. You know, what I use this for is more of like an idea. So I don't use this to buy. I don't buy here and I don't sell here. What I do is, like, it gives me a sell, and I start looking at it. I'm like, huh, why is it giving me a sell? What's going on? And I'll utilize it as an idea for me to start checking the max, the money flow coming in, RSI, and then I, you know, read the news to see what's happening with Microsoft recently. Why are we getting the buy signal? So I just want to be highlighted. I don't use these as a buy or sell position. I use these as more as a consideration. Why is this doing this? Why did I just get a buy signal? What's going on with the stock? Let me confirm it with, you know, my normals that I use: MACD, money flow, RSI, read the news, see what's happening. All right, guys. Hey, so we're gonna wrap this up. I hope this helped you guys out a little bit. I'm gonna put this on YouTube and push this link out to everybody, so that the people that, you know, missed this class, they got the information. I want to thank you guys for joining today on President's Day, and I appreciate all your support and everything. Thank you guys. You guys are showing me some love in the chat group. I appreciate it. Remember, at Traders War Room, we look at the stock market like a war zone. Stocks and sectors, those are our battle. We're doing together as a team. Everybody, I want you to attack, conquer, and destroy. And if you guys are wanting to rock it with us, then all I got to say to you, follow me. Let's go to war. You guys have a great holiday. Talk to you guys later.